What is up, kiddies? We are entering the week of June 9th. Want to come with a quick update with the top 5 things that you guys need to worry about going forward market-wise this week. Starting on Monday, to get things off on a good foot, hopefully, we have U.S. and China officials meeting in London. Trump's not going to be there himself, but Secretary Bessent and Lutnick are going to be meeting with Chinese officials to speak about tariffs, rare earth minerals, and export controls. Anything that is positive news that comes out of this meeting will be a risk-on environment for stocks. As you guys know, in the last couple of weeks, risk-on has been the way to go. If talks come out stalled or delayed in any way, shape, or form, you could see a risk-off environment and more volatility going into the remainder of this week.
GME Apes, you have your big day on Tuesday with the Q2 earnings report. EPS is expected to come in at 4 cents, a significant rise from the previous quarter. The biggest keynote that you're expecting is further clarity on the recent Bitcoin purchase, with possible plans on how the company plans to deploy the remaining $4+ billion in cash. Additionally, keep in mind that with the recent release of the Nintendo Switch 2, you could see a boost in sales.
Next up, you have CPI and PPI coming in. CPI on Wednesday morning, PPI on Thursday. Now, CPI is your consumer price index. It measures the average change over time in prices paid by consumers like you and myself. 2 things about CPI to remember that are incredibly important are that it is not the number one gauge of inflation for the Fed. That would be the PCE report because it is wider. CPI, as you guys have to know, only measures a fixed basket of goods. So this is food, housing, transportation, and clothing. And because CPI sticks to a static basket, it can lag real-world spending trends. CPI also tends to run hotter. The PPI index is for producers, which tracks the average change in selling prices received by domestic producers. For example, if a steel manufacturer raises prices due to higher demand in the supply chain, that's going to change the percentage on PPI. And remember, that number has nothing to do with profits or revenue gain from that price increase. Interesting thing about this CPI report is that in April, it came into the lowest reading at 2.3% year over year since February 2021 report. The reason for this was because of the 15+% sell-off that we had in the S&P 500. So this year over year print for CPI is expected to come in at 2.5%. Let's see if we get that 0.2% jump and it creates some immediate headwinds in the near term for the market.
On Thursday, regarding the unemployment data, we have jobless claims coming in. Expectations are 241,000 this week compared to 247,000 that we got last week. Now, a higher than expected number could signal labor market weakness, potentially boosting expectations for Fed rate cuts and impacting equities, while a lower figure could support a stronger US dollar and tighter policy outlook. And finally, on Friday, we have the consumer sentiment report coming in from Michigan. The last reading in May was 52.2, down 3% from April's reading, and forecasts suggest a slight uptick to 52.5. But persistent low sentiment, keep in mind, could pressure risk assets if the number disappoints.
And getting back to the chart real quick, last week we saw that 600 supply test hit in a egregious double top, but remember, all the EMAs are currently basing below SMAs as well, and you still have this gap down here. Now that we are a little bit higher, it does not seem to me like that gap is actually going to be filled, which is unfortunate, but it can still be used as bait for a double bottom in your most local structure. With all these news events coming up this week, if any of them go sourly, if CPI comes in hot, PPI comes in hot, if the US and China trade talks don't go well, I would totally be positioned and hedged to make sure that you are protecting yourself just in case we get a double downside leading into the following Monday. The next sequence here is 5 days. The POIs are also pretty clear, and this demand zone is ripe for the taking.